Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial jargons of businesses to give you simple, plain English insights. Today we are diving deep into a massive SEC filing from Themes ETF Trust. They put out their annual shareholder report and it is packed with details about their various ETFs. Think of it as a health check for a whole bunch of specialized investment funds. Before we dive in, if you'd like to get these kinds of easy to understand financial breakdowns, hit that subscribe button and ring the notification bell so you don't miss out. Also, we have a really active community discussing these filings in our Discord server linked in the description below. Come join us. So what exactly are we looking at here? This document is basically a report card for several exchange-traded funds, or ETFs, that are managed by Themes Management Company. It covers their performance and financial standing up until the 30th of September of 2025. They've got a lot of different funds focusing on everything from artificial intelligence and cloud computing to more niche areas like copper miners and cybersecurity. It is a lot to cover, but we're going to focus on the key takeaways, the numbers that tell the real story. Let's start with the Themes China Generative Artificial Intelligence ETF, commonly known by its ticker DRGN. This fund aims to track companies involved in generative AI. The report highlights the strong growth in China's AI sector driven by government support and heavy investment from major tech players. It points out that Kuaishu Technology was their top contributor to performance, adding over 1% to returns, while Bairong detracted about 0.18%. Next up, the Themes Cloud Computing ETF, or CLOD. This fund focuses on companies in the cloud computing space. The report mentions that global public cloud spending is projected to hit around $723 billion this year, continuing its strong upward trend. For this ETF, Alphabet Incorporated, which they know as ABC, was a big contributor, adding 0.92% to returns, but Aploven Corporation, a major player, pulled performance down by 1%. Moving on to the Themes Copper Miners ETF identified by Copa. This ETF invests in companies whose businesses are tied to copper mining. The report emphasizes the growing demand for copper driven by the clean energy transition, meaning more electric vehicles, solar panels, and wind turbines. They project a significant supply shortfall for copper in the future, which sounds like good news for miners. For this fund, Nitetsu Mining Co. Ltd. contributed positively, while Jinchuan Group International was a detractor. Then we have the Themes Cybersecurity ETF, or SPAM. As you might guess, this fund invests in companies that provide digital security solutions. The report highlights a worldwide surge in demand for cybersecurity due to increased threats from cloud adoption, AI integration, and remote work. Global spending in this area is expected to reach about $212 billion. Nebius Group NV was a big positive for the fund, adding 2.91%, while Rapid7 Incorporated reduced performance by 0.56%. Now let's look at the Themes Generative Artificial Intelligence ETF ticker-wise. This fund invests in companies that generate revenue from AI data analytics and natural language processing. The report notes that AI-focused ETFs have been popular in 2025, driven by AI adoption across various sectors. Pagaya Technologies was the top performer, adding 4.72% in returns, while SoundHound AI Incorporated reduced performance by 3.51%. Following that is the Themes Global Systemically Important Banks ETF, or GSIB. This ETF concentrates on banks deemed systemically important due to their size and global reach. The report states that these ETFs have seen strong results this year, partly due to higher interest rates boosting net interest income. They highlighted Banco Santander SA, Deutsche Bank, AG, and Societe Generale SA, all returning over 100%. Then we have the Themes Gold Miners ETF, ticker OMI. This fund invests in companies involved in gold mining. The report points to a surge in gold prices topping $4,000 an ounce. This rally is fueled by geopolitical tensions, a weaker US dollar, and inflation concerns, all making gold an attractive safe haven. Goldfields Limited was a significant contributor for this fund. The Themes Humanoid Robotics ETF, or BOT, underwent a strategy and name change in August of 2025. Previously, it tracked industrial robotics and automation, but now focuses on companies in the humanoid robotics value chain, including AI-driven automation. The robotics market is projected to reach about $53.7 billion this year. Hesai Group contributed positively before the change, while Rich Tech Robotics Incorporated detracted. After the change, Flex Limited added value. Next up is the Themes Lithium and Battery Metal Miners ETF, ticker LIMI. This ETF focuses on companies involved in lithium and battery metals mining. The report notes a rebound in lithium demand due to accelerating electric vehicle production and expansion of energy storage projects. Lithium prices have stabilized and government incentives for EV manufacturing are boosting long-term demand. Ganzhou Tengyuan Cobalt New Material Company Limited contributed positively, while Arcadium Lithium detracted slightly. We also have the Themes Natural Monopoly ETF, or ZAR. This fund invests in companies with high sales, stable profitability, and operational efficiency in natural monopoly sectors like utilities and railroads. The report mentions that these sectors offer stable income, but also face headwinds like regulatory scrutiny. Broadcom Incorporated was a top contributor, adding 1.29%, while Adobe Incorporated reduced performance by 1.09%. Then there is the Themes Silver Miners ETF ticker AGMI. This ETF has delivered impressive performance this year, with silver prices climbing above $31 an ounce. The rally is driven by strong industrial demand, especially from the renewable energy and electronics sectors. Wheaton Precious Metals Corporation was a top performer. The Themes Transatlantic Defense ETF, or NATO, has gained momentum this year. This is likely due to heightened geopolitical tensions and increased defense spending by NATO nations. Governments are boosting budgets for modernization and innovation, benefiting companies in this sector. Axon Enterprise Incorporated was a contributor, while Aselsan Electronic Sanayi Vitakarat was a detractor. The Themes Uranium and Nuclear ETF, or URAN, has surged as demand for clean, dependable power grows. Uranium spot prices have climbed, and countries like the US and China are investing in nuclear capacity. Chengdu Guang Electric Company Limited contributed well, while CGN Power Company Limited detracted. Moving on to the domestic funds, we have the Themes US Cashflow Champions ETF, ticker LGCF. This ETF focuses on US companies with strong, stable cash flows, which are attractive in volatile economic times. Applov Corporation was a top contributor, adding 1.28%, while Bristol Myers Squibb Company reduced performance by 0.72%. Next is the Themes US Infrastructure ETF, or Hatchway. It is benefiting from steady federal and state spending on infrastructure projects across transportation, renewable energy, and broadband. Caterpillar Incorporated contributed slightly, while Norfolk Southern Corporation detracted slightly. The Themes US R&D Champions ETF, or USRD, invests in US companies with strong R&D spending and profitability. The report notes that firms investing heavily in AI, biotech, and advanced manufacturing are seen as innovation leaders, even though development costs can be high. Lam Research Corporation was a positive performer, while Trade Desk Incorporated reduced performance. Finally, we have the Themes US Small Cap Cashflow Champions ETF, ticker SMEF. This ETF focuses on small US companies with high cash flow yields. The report mentions that while small caps are benefiting from stabilizing borrowing costs, they still face headwinds like wage costs and tighter credit. Flex Limited and Williams Sonoma Incorporated were notable performers and detractors respectively. Now let's talk about the financials. Because there are so many ETFs, we will sample a few of the key financial highlights for the year, ending the 30th of September 2025. For the Themes China Generative Artificial Intelligence ETF, the net asset value started at $25 and ended at $37.5. This is a solid gain of 50.05%, driven largely by an increase in investment value. Their expense ratio is 0.39%. The Themes Cloud Computing ETF saw its net asset value grow from $28.05 to $35.73, showing a 27.35% return. Their expense ratio is 0.36%, and the fund saw good gains in its investments. For the Themes Copper Miners ETF, the NAV was $28.03 at the start and ended at $36.87, resulting in a strong 33.24% return. Keep in mind this fund only launched in September 2024, so this is a fantastic start. The expense ratio is 0.38%. The Themes Cybersecurity ETF moved from $28.96 to $34.92, delivering a 20.73% return. Expenses are low at 0.36%. The Themes Generative Artificial Intelligence ETF saw impressive growth from $29.84 to $43.73, a 46.57% return. Its expense ratio is 0.35%. The Themes Global Systemically Important Banks ETF had fantastic years, starting at $31.27 and ending at $48.08. That is a 56.30% return. Their expense ratio is 0.35%, quite reasonable for this kind of performance. The Themes Gold Miners ETF had an absolutely stellar year, starting at $37.62 and ending at $79.51. That is a massive 115.31% return. Their expense ratio is 0.35%. This ETF clearly benefited from the surge in gold prices mentioned earlier. The Themes Humanoid Robotics ETF started at $28.13 and ended at $39.69, delivering a 43.51% return. Its expense ratio is 0.37%, fairly standard. Notice the very high portfolio turnover rate of 197%, indicating a lot of buying and selling within the fund. The theme's lithium and battery metal miners ETF saw its NAV rise from $30.76 to $37.41, a 31.27% return. Its expense ratio is 0.38%. Scroll Theme's Natural Monopoly ETF per share data chloro for the themes. Natural Monopoly ETF, it grew from $29.68 to $32.58 for a 10.82% return. Its expense ratio is 0.36%. This is a more modest but steady performance. The theme Silver Miners ETF had another great year, starting at $29 and ending at $53.68. That is an 88.37% return. Their expense ratio is 0.35%, and it is worth noting the filing mentions that 2.32% of this total return came from reimbursements by the advisor for trading errors. So a great return, but with a slight asterisk. Lastly, for the Transatlantic Defense ETF, the report shows a strong start since its inception in October 2024. The net asset value began at $25 and was $38.89 by September 2025, representing a 55.70% return. The expense ratio is 0.35%. This ETF is clearly benefiting from the current geopolitical climate. Overall, these reports show a lot of diverse ETFs with varying degrees of success. The AI and natural resource focused funds like gold and silver miners have seen incredible gains, while others like natural monopolies show more stable, but less explosive growth. On the operational side, these funds are managed by Theme's management company and distributed by Alps Distributors Incorporated. They all have similar expense ratios, which is good for investors. Now for my take, Theme's ETF Trust appears to be successfully launching and managing a diverse range of thematic ETFs, many of which have shown strong performance over this reporting period. The high returns in areas like gold, silver, mining, and defense ETFs highlight their ability to tap into current market trends. The AI and robotics ETFs are also showing significant growth potential. However, we saw that the Silver Miners ETF's impressive return was partially due to advisor reimbursements for trading errors, which is something to keep an eye on. Also, the high portfolio turnover in some funds like humanoid robotics suggests they are actively trading, which can sometimes lead to higher costs, though their stated expense ratios are quite competitive. The focus on passive indexing for most funds seems to be working well in capturing sector-specific growth. One thing that stands out is the short operational history for many of these ETFs launched in late 2023 or 2024. While the performance is great, it is important to remember that past performance is not a guarantee of future results. The overall direction seems to be toward capitalizing on emerging technological and commodity trends. What do you think about these results and the future prospects for these ETFs? Let me know your thoughts in the comments below. If you found this breakdown useful, please give it a thumbs up and subscribe for more. And definitely check out our Discord server linked in the description for more in-depth discussions. Thanks for watching, and I'll see you in the next one.